Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago, President and CEO of InTheMoneyStocks.com. Nick, thanks for coming on the show. How are you?
Michael, great to be back. Thank you.
My pleasure. All right, Nick, you want to start off talking about GLD, the gold market?
Yeah, I want to talk about GLD because I see a lot of headlines out there. People are very, very bullish gold. I'm not bearish gold anymore, but I'm in the camp that gold is going to have one more significant pullback, and then it would be the time to buy. I know I've said this on your show countless amounts of times. I think gold will bottom out probably in the latter part of the fall. Right now, we've had a pretty good move. It's what we call a zigzag pattern or a symmetrical DC move up, but it should be really the extent of it. I would start for people to take profits in gold or at least trail your stop loss. If you own the GLD, I would not be a buyer up here at these levels. You'll get a good chance to own it a little bit lower at a later date.
Do you have any idea where you think you'd like to buy this gold on the pullback?
Yeah, I think around probably 145, 150, somewhere around there. Maybe it might be a little bit lower, 143.
Okay, so
it's going to be nice.
Yeah, we're looking at 161 right now on the GLD. You said 145, 150. That means something big is going to have to happen to this market to push it back down there. What do you think that's going to be?
Well, the catalyst is there's not going to be any quantitative easing right here, and there's going to be some disruption in Europe. I mean, you already have China in free-fall mode. I mean, it's just a matter of time before that thing breaks down even further. So, you have one piece of the puzzle already down. The second piece of the puzzle will be some disruption in Europe. And the third piece of the puzzle will be the Fed not doing a QE at this time.
Yeah, no, I'm a technician, first, last, and always, but something that big has got to have a fundamental behind it. And thank you for bringing that out. Apple, you wanted to talk about that market.
Yeah, I wanted to talk Apple because last week when I was on your program, I had mentioned Apple looking like a short within the next week or two. And you had a nice little sell-off about 2 days ago on Apple on humongous volume, holding in there. And I suspect it probably hangs in there till the Labor holiday. But after Labor Day, I think traders should take a closer look at this one, as this one could be setting up pretty nice steep decline to drop 2 days ago of what's about to happen to that stock.
Okay, your phone's fading in and out on this. We're not catching all the words from you, but let me see if I can capsulize it. You're looking for a pullback after the Labor Day holiday. How deep of a pullback do you think we might get on the Apple? Yes, so much better. We ended on Apple. You're looking for a pullback after Labor Day. Give us an idea where you think it might go.
Well, initially, I think once the selling starts in the stock, you'll go right down to the 600 level. After that, we'll see how it reacts around that because there's a lot of support at 600 in all fairness. Then if that thing really breaks and we go into a significant correction in the overall market, I think Apple has a tendency to a possibility of dropping down to 470.
Wow. That is huge, especially since it looks like it's at a plateau right now, 665 to 400?
470.
470. That is... Man, you pull that off. Believe me, you're definitely getting the gold chalice on this one.
Oh, we'll see soon enough. It's right around the corner.
Now, that leads me, before we get into TLT, that leads me to the NASDAQ. And if Apple drops that hard, there's obviously a shorting opportunity in the NASDAQ.
Absolutely, and that's another way you can play it. You don't have to short Apple because it's such a high-priced stock, but you could just buy the QID, which is a 2 times inverse, or you could just short the Qs. And that's, basically Apple is over 20% of the NASDAQ 100 now, so you could just short the Qs.
Okay. All right. That's good. What about the TLT now?
Well, TLT is something we have talked about on your show for a long, long time, and it had a pretty significant breakdown with that rise in interest rates. So TLT represents a 20 and 30-year bond. As that thing has sold off, it has made a nice comeback right now. It's into a little bit of resistance here. A big level for it to get through, believe it or not, is going to be the 126.40, 127.78. If it can establish itself up there, TLT could regain its momentum and move right back up. And this is something that where the market is trading in like the summer doldrums here with very, very light volume. The TLT is holding up pretty well, and it was able to get above that August 16th high, which tells me there is some strength out there in the bond market again.
Okay. And what about this SMH?
Well, the SMH I brought to your attention today because that's a semiconductors holders, the old semiconductor holders trust, but it's a market vector semiconductor ETF, and it's a good barometer. And something I wanted to share with your listeners was more along the lines of learning. And if you take a look at the NASDAQ or the NASDAQ 100, it's testing the April highs. This thing has not been able to go near its April highs, and it's lagging the overall technology sector. So when I see that, it's a little bit of a heads up and a warning sign for me that the markets are getting ready for a sell-off.
Now, we're starting to see that happen here. I mean, last couple of days, this market has turned over, and I wanted to get your opinion of cycle times. In other words, how long do you think this pullback will last and how deep it'll go in S&P terms?
Well, we got to see how it reacts first. We're getting a little bit of a rollover here, but the volume trends are so light, and we haven't even breached the last significant pivot breakout area on the S&P 500, which was around the 140 I'd say the 1400 level. So, again, we're just coming back down to that area and testing it. This is going to be the real test. Once we break here, we should get to 1350 without a problem. And then we'll see what kind of pattern reacts there, how the pattern forms, and then we'll see the reaction, and we could go a lot lower. I think ultimately this thing could go back down to the June lows or possibly even a little bit lower.
Okay. Do you see this as the beginning of a longer-term trend, or that could be a nice buying opportunity for a rally going into elections?
Well, as you know, Michael, I think this year is going to be a little bit different. As we've spoken about this, I don't think this market is going to hold up into the elections. I think it's going to be selling throughout the elections. This is going to be a very disturbing election. It's not going to be the gift that election years usually are. And then after the election is when I'm going to start to look for a significant low.
Okay, I got it. Obviously, now there's a lot of people that have been coming on to the show saying that if this market sells off after the election, it means that we've probably got an incumbent back in office.
Well, to be honest, I don't know if there's really all that much difference between both parties anymore, to tell you the truth. So for me, it's all about following the chart pattern, following the cycles. Overall, it doesn't matter who gets elected as far as I'm concerned. I think after the election, the markets are going to start to tick higher. Okay, got it. All right, before you go, give everybody a way to get in contact with you and get into that trade room and watch you pull these trades off. Yep, come over to InTheMoneyStocks.com. You could take a 7-day free trial to our research center or our intraday stock chat. You'll see our trading desk live. Also, we are holding an In the Money Stocks methodology webinar this Saturday for anyone that wants to attend. We do have a few available openings, and that will take place Saturday at 1 o'clock. And let them know how long that lasts, because that's not a 5-minute event. You really put a lot of effort into that. Yeah, that event is going to run about 6 to 7 hours. Good job. It's going to be a full-day boot camp. Yeah, believe me, that's well worth the time to go there. Thanks so much, Nick. Thank you for having me, Michael, and I apologize about the mobile complications there. Don't you worry about it. Your name is gold in our book. Thank you, Michael. Have a great day. You too. We'll talk to you later, Nick. All right, everybody, Nick Santiago, President and CEO of InTheMoneyStocks.com. On the other side of this break,